My name is Gareth Soloway, and I was a losing trader until I mastered technical analysis. Logic and charts beat hype and narratives every time. Now I teach investors the same techniques that made me a multi-millionaire. This is my trading game plan. Good morning, everybody. Welcome to my trading game plan and happy Monday. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. As always, all charts, no BS. That's what we are here at Verified Investing. And we're going to start with the big news over the weekend, or basically came out Friday afternoon. Warren Buffett invested in Google/Alphabet. Now, what's interesting here, folks, is that what we're seeing is essentially Google/Alphabet's up about 3.5%, but the S&P, which was up overnight, has faded and gone negative. In addition, one of the leaders to the downside is Nvidia and other chip stocks. And so, again, if you remember last week, we really talked about how the semiconductors had maxed out their extension based on going 102% above the weekly 200 moving average. And it wasn't just an arbitrary number that I chose, right? I chose the 102% extension because that was the most you ever got extended in 2021 before a 45% drop in the semis. And in 2024, we got 102% above that moving average before we collapsed 40%. And so there's always a method, there's data to the madness, if you will, that I discuss with you guys to let you in. And a lot of this, by the way, is institutional type stuff. And I love bringing that to you guys because, again, really there should be a much more even playing field for all of us in the investing world. All right, so let's get right into it here. Let's start with the charts. This is the S&P 500 futures. The reason I look at the futures is because it shows us all night long how the market's traded. So this was back on Friday. The markets came out of the gates blazing. We had this huge rally up right after the gap down on Friday. We were opening sharply lower on Friday, and then we rallied back and we basically closed flat. Now, normally people would say, wow, that's bullish to regain. On a Friday afternoon or Friday, I don't really look at it that way. And interestingly enough, you can see overnight last night, the futures did inch higher, and now we've started to come back in substantially to the point where the S&P is negative. Now, one of the key culprits here is this chart here. This is your chart of Nvidia, and you can see Nvidia at 4 in the morning traded as high as $192. It's now trading at $187. So we've already dropped $5 on Nvidia, which, by the way, guess who has earnings on Wednesday after the close? Nvidia, folks. And that's going to be a make or break for this market. The reason I say that is because not only is it the biggest market cap company, but ultimately what we do know is that the AI trade has ruled the roost for the markets, meaning it's basically been 75% of all the upside in the S&P has been basically a handful of stocks, the AI stocks. And so if this stock, the biggest market cap company stock, falters and doesn't go up on earnings, it likely will continue the downward move that I believe we have already started. Now, I'm in listen, I've been straight up with you guys. If I think it, I tell you guys, right? It's all based on technical analysis. The idea is it has a larger probability of occurring. I do believe that the S&P is going to drop 10% from its all-time highs, and I believe the NASDAQ will correct here in the next month to 2 months, 15%. All right, so again, I'm going to show you why I get that methodology here. But first, let's go to our daily chart on Nvidia since we were just discussing it. So this is huge, guys. This is absolutely huge right here. You have this upsloping trend line. We gapped below it on Friday, and they saved us by getting us back above. Watch today. Do we close below this line? If we close below, do we confirm on Wednesday, right, or Tuesday, going into earnings a breakdown? If we do, to me, that would be very, very bearish if the chart is beginning to tell us there's further downside, and then they report earnings really that day or the next day. So watch that. I will keep you posted if it does confirm a breakdown going into earnings in the next couple game plans. Okay. So that's number one. Let's flip back to the S&P 500 here, the SPX. The SPX, again, weekly chart is one of the reasons I believe we're on the verge of a bigger correction than most will assume. And by the way, In reality, is 10% really that much on the S&P? Now, listen, I actually think we're making a cycle top too, but the idea is I think we'll get a 10% correction and then we'll rebound back up. The buy the dippers will come out with guns blazing, trying to push the market back up. We'll get close to the all-time highs. I think then we roll over again. But let's take it one step at a time. This chart right here is the reason I believe that right there. You can see, look at the fall we had on the S&P off this trend line, which happens to be the parallel to this trend line, which literally marked the low 1, 2, 3, 4, 5 times in a row on the S&P. And so it makes sense that this was your bull market 2021 high before a bear market in 2022. This could be our bull market high in 2025 before potentially a bear market correction. Now, you might say, well, where do you get your 10% correction from? It's actually technically 11%, but all it is basically just noticing that former high pivots tend to become major support levels, right? So again, you look at past periods, oftentimes when we have a major high like this, the obvious pullback level is towards that key point in the charts before we get a significant retrace. All right. So again, where or how much of a distance is that? If we go to the all-time highs, that would be about 11%. So again, I'm rounding to 10% to keep it simple, but nonetheless, that's what I'm looking at. Then we flip over to the SMH, which is probably the most powerful of all charts. I'm going to flip to our 200 moving average. You can see I annotated this last week with you guys. I'll clean it up just a little bit, but suffice it to say, just simply put, look at this, guys. So this is the extension that I was just talking about, right? So here's your 2021 bull market. You got 102% above that 200 moving average. This is your weekly 200 moving average right here. All right. So a 45% correction, basically back to home base, which is AKA the moving average. Then we had in 2024 an extension rally, huge rally. We got 102% above, 40% correction. And so the idea is, here was your high 3 weeks ago. Are we starting a similar type drawdown in the semis? And again, I will say this, in the near term, NVIDIA is going to be the game changer, right? I mean, that's literally, listen, I think it's going to happen regardless of NVIDIA, frankly. But if NVIDIA gives us bad earnings, it's going to happen a lot faster, right? It's going to, I mean, it literally will take down the S&P, the SMH, or the semis as a whole significantly on the back of those earnings. And just a reminder, those earnings are Wednesday after the bell. So Wednesday after the market closes, those earnings will be out. Now, another chart I'm watching here, guys, is our parallel channel on the QQQ. Remember, about 10 stocks make up about 50% of this NASDAQ 100 because they're so big now. They're so bloated now. And we can see all of these highs right up to this one right here have marked pullbacks. Now, these have been more minor pullbacks, right? Again, you could talk about more minor retraces. This one's actually one of the larger ones. But the reason I'm focusing in on this is because we finally hit, if we look at how many times we hit once, twice, 3 times, 4 times, are we about to break here? Now, listen, many people would say, oh, we already broke. You guys know, I don't go by a break of a trend line. Oh, woo, we broke a trend line. Because I've been in the case, and I've been fooled by this so many times, where institutional money will close us below a line where it's a breakdown or above a line where it's a breakout. And then, it's like, oh, man, I better cover my short. I better go long. And then the rug gets pulled right from under us. And so what I figured out is there's something called the confirmation signal that I created probably about 10, 12 years ago at this point. But it essentially confirms where the odds go from like 50-50 and 60-40 that it's a real breakdown to like 75-80% that it's a real breakdown. And those are really big percentage differences, right? It's a coin toss to a pretty sure bet once you get towards 80% probability. And again, where would we have to close today to confirm a breakdown? We would have to close below the first breakdown candle low, which would be right here. So any close today below 606 on the QQQ, right now we're at 607 and change, that would confirm a breakdown of this parallel. Now, if you confirm a breakdown, just a reminder, guys, it doesn't mean you go like this. Like, oh, we confirmed, boom. Like, that's not what happens. That's not how markets work. Markets don't do that because psychology, which is the driving force behind price action, is run by people that have been conditioned. Listen, everyone out there has been conditioned to assume every pullback's a buying opportunity. So there's money on the sidelines that will say, wow, the markets are down 3%, buy. Then it'll be down 5%. Oh, well, buy, duh. Like these kind of mentalities are coming out. If we ever get down 10%, people will say, oh my goodness, this is a huge buying opportunity. We'll be at all-time highs in a month, right? I mean, that's the psychology from COVID to the August 2024 drop to the liberation sell-off low. V bottoms, right? How many times have we all heard V bottoms? 5 years ago, did you ever hear about a V bottom? No, not really, right? So again, that mentality is going to make that any sort of drop in the markets is much more of a initial drop and then a buy and then another dip and a lower high, lower low kind of thing, up and down and up and down. Now, again, I do think we stair step to the downside, but that's ultimately it. By the way, when do most panic sell-offs occur? Do they occur at the highs of charts or do they occur at the lows of charts? And the answer is they occur at the lows of charts, because at the highs of charts, psychology has people buying the dip. It's not until the lows, when people have been just smacked down over and over again as they bought the dip and it's been wrong, and they bought the dip and it's been wrong, and they're just like, oh my goodness, I give up on this, dump it all. And that's where you get the collapse. For those of you out of interest here, and I haven't really gone over this much, but if we go back to the SPX here, and let's go all the way back to 2008, right? Let's go all the way. We're going way back, way back. We're taking our DeLorean all the way back here, right? So let's go back to well, this is the .com, but basically your steepest sell-off. Look, so here was your high. Here was your high in 2007. We went down, then we bounced. Then we went down a little bit more. Then we bounced, down, bounced. Then a bigger fall, and we still bounced. And then we had a bigger fall in the minutes. And then look at how starting in September 08, we started to have the bigger sell-offs, finally culminating in this period right here in February into March, where it was just, I mean, you had a couple green days along the way, but it was just, I mean, this was just nasty, folks. This period right here, percentage-wise, from this high to this low, and this was in a month, 23% drop in the S&P in a month from February 10th to the low on March 6th. So basically just less than a month. 23%, almost 24% drop. And so my point is that I want to prepare you guys. If it's a cycle top, there will be many instances along the way where people question and say, oh, it's not a cycle top. Look, we're bouncing right back up. Look, the buy the dippers are coming in. It's not until the end that you get the panic selling. And so that's actually when, believe it or not, and for you guys following me, I'll guide you through this. But when you get the panic selling, guess what we do? What do you and I do when we get selling? Coming into multiple factors of support. We start saying, oh, thank you, thank you, thank you, thank you. I'll buy, I'll accumulate, right? That's the way you do it. So when everyone else is freaking out, when mainstream media is panicking, when social media is freaking out and calling like, oh, like I'm giving up on the markets, that's when we're like, oh, I see the psychology of this market. Let's start to accumulate. All right. Kind of got distracted there. Let's get back to the charts. Dollar today is flat to positive. We're still stuck within resistance on the DXY from about 100.3 to 101.3. Major resistance right in here. And then support, this support line goes all the way back to the 08 financial crisis lows. As long as we're stuck in between here, there's not a whole lot to say. We're just chopping. What I'm looking for as a technician is, do we break above this or do we break to the downside? Which way do we go? 10-year yield consolidating here. Is it going to break out? All right. We just, by the way, got the New York Empire manufacturing data, which is released by the New York Federal Reserve. So the Bank of New York, right? The Federal Reserve Bank of New York. So it's not a government number. We're not getting government numbers, but it was stronger than expected. Came in at like 18 and they were expecting a 6 reading. So to me, that tells me, is the Fed more likely to cut after that or less? And the answer is probably neutral to less after that reading on manufacturing. So manufacturing's upticking a little. I don't think it's going to all of a sudden roar, but it is upticking just a little bit. All right, couple other things here, guys. Google, we talked about that. Daily chart, we are seeing again that rally on Google here. You can see right here, let me just zoom in. This is where the news broke Friday right at the close about Warren Buffett investing $4.9 billion. It continued to trail up, but look, this is not good, guys. Look at this fall. Look at this rollover. Like, again, when Warren Buffett invests in something, it usually holds its gains. Now, listen, maybe it rallies at the open, but this is not ideal of what we want to see. Right? So again, it's weak signals. These are things when you have good news and you still sell off on good news, that's when the market's telling you something, because that is a signal institutions are unloading. Okay, because retail doesn't hear good news and say, "Oh, let me sell." Right? I mean, think about psychologically, like, you hear, "Oh, it's great earnings." Like, no, retail, like, "Oh, well, I'm going to dump on that." Like, no, it's the institutions that see further down the road. And so we want to pay attention to these signals. This is not good price action for Google on the back of that. Netflix, the only reason I'm bringing up Netflix is they did a stock split. So instead of being an $1,100 company, it's a $110 company. Again, remember what I said to you guys. When a company does a split after bad news on earnings, they're trying to artificially lower their share price so more investors will buy. They're artificially trying to get more investors to get in their stock, which will prop it up. It's not a good thing. Now, listen, if they had done the stock split when they had good news, like when it was all the way up here or even over here, okay, you might be able to do that and make a case for that. But they waited on purpose, and then they're like, "Oh, crap. We don't have good news anymore. The company's slowing. Let's do it now." And that's problematic. That is a bear market signal for Netflix specifically. Not good for that company. MicroStrategies, guys, keep an eye on this. Listen, I've been a critic of MicroStrategies, and I don't like leveraging, right? I don't like using borrowed money to buy anything. I get where Michael Saylor's coming from, but the valuation on MicroStrategies per their Bitcoin was ridiculous. I said it many times. I said, just buy Bitcoin, right? Why would you pay a premium to own Bitcoin when you could buy Bitcoin cheaper? Well, guess what? We're now at a point where MicroStrategies is actually trading slightly below its valuation based on how many Bitcoin they own. Now, it's not as simple as saying, "Oh, it's below, let me go in and buy this," right? Part of the issue here is they've raised a lot of debt, right? So again, if you look at their balance sheet, they have debt now because they've bought more Bitcoin with that. That does cause some hardship for a company, and it is a risk factor. So it's not surprising it's trading below its Bitcoin holdings, but it is coming into a technical level where I am watching. Anywhere I would say between 185 and 175, look at all this support down here. There might be an opportunity there. Palantir, borderline major breakdown. It is down this morning. Again, closed below, closed back on. If it breaks down here, trend has broken. Let's speak about Bitcoin now. Bitcoin is holding my level. I gave you guys this level, this 94-ish thousand level. I said this is going to be where the major battle is fought, right? So this is a trend line that goes back to basically the beginning of the bull market. All of these lows right through here, right, and right through there. This, again, is an epic zone. If it breaks, we're going all the way likely down to 73 to 75,000. If it holds, it could eventually get back to all-time highs. So this, my friends, is an epic level for Bitcoin. It's got to hold this, let's say, 93, 94, 95,000 zone, this trend line right here, okay? All right, so that's where we are. If we look at ETH here, guys, ETH again is down. It has not hit my buy level just yet. I'm around 2,800 to 2,750. Remember, I'm a swing trader, so please understand that. For those of you that are hodlers, this has nothing to do with hodling. I'm not saying ETH will bottom out or Bitcoin will bottom out, wherever this is. I'm saying that as a near-term level for a bounce, that's a high probability opportunity. All right, next up, let's go into gold, guys. Gold continues to pull back. A lot of people were saying, Gareth, it's crazy to think we could. They were saying, oh, gold is going back to new all-time highs. I said, guys, it's got to get through this level first. Then it could test all-time highs. Boom, right down it comes. And listen, I just go by the charts. What are the probabilities? Now, probabilities, ultimately, a 30% odds can work out 3 times out of 10. But right now, the 70% odds favor a retrace in here, small bounce, and then a break lower on gold. Silver, We talked about this too. In fact, I shorted it with members of Smart Money Commodities, my commodity service. Financial crisis low, bull market high, COVID low. We slammed here. We rejected. It went to double top just last week and it got rejected. Again, I did short it again right up in this range. We are in the money on that trade. Let's quickly go to the oil chart here as I finish out. If we take a look at the daily chart, the cup and handle is still technically in motion. Here's your cup and handle. This is a bullish pattern, essentially a bull flag coming off a reversal called a cup and handle in technical analysis. And again, this pattern, as long as it doesn't take out this low, all right, this is a bullish pattern and you would expect an eventual breakout. Now, how high is oil really going to go if the economy is slowing? Probably not that high. Maybe 65, 66, 67, but still short-term traders. That's what I like to see right there. Natural gas. Let's quickly check in on nat gas here. Nat gas is pulling back a little bit. It still has not achieved my resistance level where I would feel comfortable to short this. It got really close. Look at how close it got on Friday's action or last week. But again, now it's stalling. Let's see if we get one more push into this zone here. And then I actually do start to like it as a selling opportunity. All right, guys. So listen, big week this week. We're going to have obviously NVIDIA earnings, but more than anything, Friday, you had the buy the dippers come in at the open. We had this gap down following the big sell-off on Thursday, and they bought it in, and the markets basically rallied, went green, and then closed flat. But it kind of gave a reprieve. It kept the fear out. But this morning, the futures were up. Now they're sliding negative. Let's watch and see how these stocks trade. Let's watch the levels. Let's factor in probabilities. Thank you guys so much for tuning in. I always try to bring my A game because your time is important, and I appreciate that you're willing to spend it with me. Remember, folks, we're here to give you the details based on charts and data, no BS. Share it with friends and family. That's all we ask here at Verified Investing. Thank you so much for tuning in. Have a good one. Take care.